1913, the Federal Reserve Act was passed. Floor of the House, where 3 members of Congress were on the floor. At that time, they only needed a majority of votes to pass it. So in 1913, the Federal Reserve Act was passed. 20 years later, 1933, under Roosevelt, the United States was declared bankrupt. And in 1933, the Federal Reserve Private Bank says, okay, USA, what are you going to pledge as collateral on the debt you owe me? What happened by 1936? Does anybody know? We instituted Social Security system, and you and I and our children and our children's children were pledged as collateral on the debt of our government to the Federal Reserve. And that's where we're at today. It took 20 years to make this country bankrupt, and since then, our government has operated under emergency powers of our government. It is not the president that makes the decision in this country. It's the Secretary of Treasury who turns around and is put in there by the Federal Reserve to manage the bankruptcy. We've been in bankruptcy ever since. So to print $700 billion and to give it away, how do they get away with it? The manager of the bankruptcy is told by the Federal Reserve this is the way to go. That's where we're at today.
All right, so we have to replace the current banking system or the world's going to continue to go to hell in a handbasket. So let's replace it with the perfect banking system. The perfect banking system produces a balanced economy where the prices are influenced only by the free market supply and demand and not also by inflation and deflation. It frees the nations that use it from eternal debt slavery while restoring and securing their sovereignty and health. And it also resolves the age-old conflict between technology and job availability. For the perfect banking system to keep the economy balanced, or for any banking system to keep the economy balanced for that matter, the banking system must keep the money supply side of the economic scale in equal proportion to the production and trade side. And the only way to do that is to have the people and their governments ledger their own interest-free checkbook money into existence instead of borrowing the central bank's interest-ridden checkbook money into existence and provide banking as a public service. To secure the production and trade side of the scale and keep that in equal proportion to the money supply, the governments have to instate trade tariffs on commercial imports that have domestic competitors. Here's a great image explaining how tariffs work. In the United States, American-made cloth costs $4 a roll. In Britain, British-made cloth costs $4 a roll. A 25% tariff of $1 is added to the price. British-made cloth costs $5 a roll in the United States. The tariffs make local products in local markets more attractive than their foreign competitors, and they incentivize the development of local production to replace imports with domestic products. Both results work to secure production and trade in the nation. To secure the money supply side of the scale and keep it in equal proportion to production and trade, the people and their governments have to ledger their own interest-free checkbook money into existence and provide banking as a public service. This can be easily accomplished by the people's governments nationalizing the nation's already established banking systems and putting them under the control of their nation's treasuries. commercial banks will become branch offices of the people's national treasuries where the common business of banking can continue. The central bank's interest-ridden checkbook and cash money in the now nationalized bank vaults would be converted to the national treasury's interest-free checkbook and cash money. Interest would be outlawed. All past fractional reserve loan debts would be repudiated without destroying the checkbook money that was born from that debt. And all the property that was collateralized for that debt will be given to the people who collateralized it with a loyal title to their property. All of the nationalized banks nationwide operating as branch offices of the government's treasuries taken together will operate as one large national bank with the nation's money supply in its vault. Imagine a single bank vault with all the nation's money in it and bank tellers spread out nationwide that everyone can go to access their portion of the money that's in that vault. Switching to the perfect banking system means going from the detriment, disadvantage, and drawback of using the central bank's accounting books to the benefit of using our own. It's the people's collective agreement of valuing a specific currency working for the benefit of the people. It's freedom from debt slavery. It's all those things, and it all starts with this banking system being a nationalized banking system that's controlled by the national treasury and not the central bank as is the case today. The money supply in the perfect banking system is the total amount of cash, coins, and checkbook money in circulation. In the perfect banking system, banks are required to exchange checkbook money for cash money with the national treasury at a rate that keeps them with at least 34% of the money in their vaults as cash on hand. For the public, the new banking system will operate mostly as it does today. The primary noticeable difference being that it will be the people's government's treasury's money circulating in the new banking system instead of the central bank's money. Money is created in the perfect banking system similarly to how it's created in the current banking system, and that is created primarily when banks produce loans. And since interest is outlawed in the perfect banking system, then only the principal portion of the loan is expected to be repaid. And since banking in the perfect banking system is a government-run public service, then the repaid money gets used to supplement the government's funding instead of being destroyed or relent with interest. For the people taking out loans, they would go to their local nationalized treasury bank, and their bank would create the money for them as interest-free checkbook money. The borrowers would have to collateralize the loan with a property of 10% greater value and a 10% down payment. And the collateral needs to be insured with the local nationalized treasury bank. The local nationalized bank will charge the borrower a monthly insurance fee of 0.0834% of the value of the collateral, which amounts to 1% of the value of the collateral annually. The loan amount payable to the borrowers will be determined by the value of whatever it is that they are collateralizing and a 10% down payment, as well as their annual net earnings. 1/3 of those earnings will be multiplied by 10, and that's the maximum amount of money that the bank can give the borrower. That amount will then be divided by 120, and that's the amount of the loan's monthly payments. The local nationalized treasury bank where the money is created will purchase the collateral with that money and the 10% down payment and take the title to the collateral until the amount of money that was created is returned by the borrower interest-free. And as previously mentioned, the money being returned would be used to supplement the government's income. It would do this by the banks taking the borrower's payments and dividing them evenly between the different administrative divisions of government responsible for administrating the jurisdictions that the collateral resides at. That is to say, in a country like America, a property that's located in a city's jurisdiction, that's located in a county jurisdiction, that's located in a state jurisdiction, that's located in a national jurisdiction, its loan money payments would be divided evenly between the 4 different divisions of government responsible for administrating those 4 different jurisdictions. And a nation that has only one administrative division of government, like Monaco for example, its loan money payments would be divided evenly between its level 1 division of government and its national government alone, and so on. Once all borrowed money is returned to the bank will give the borrowers a allodial title to the collateral they purchased. The principal and insurance payments funding component of this banking system exists to curtail inflation and deflation and eternal debt slavery and supplement the government's funding annually by 10% of the secured loans that are held by the nation's treasury and by 1% of the value of the collateral that's securing those loans. Also in this banking system, the Treasury Bank shall issue debit cards and credit cards. Debit cards so that people can electronically transfer or access funds from their accounts, and credit cards so that they can have the Treasury create the funds they need via the credit card purchase, interest-free, much like a credit card is used today, only without the interest and with a down payment requirement. The amount of money creditable to the people through their Treasury credit cards will be 9-to-1, up to 1/3 of the user's annual net earnings. That is to say, in terms of dollars, the Treasury will credit 9 checkbook money dollars for every $1 physical or checkbook money dollar someone deposits in a Treasury credit account, up to 1/3 of their annual net earnings. The minimum monthly credit card payment is 2% of the balance. Similar to the loan money previously mentioned, the users who order the credit card money will return the money they ordered interest-free in monthly increments to the bank, where the bank would divide that money along with the money deposited in the Treasury credit account evenly between the different administrative divisions of government responsible for administrating the jurisdiction that the users reside at. This component also curtails inflation and deflation, ends eternal debt slavery, and supplements the government's funding annually by 24% of the credit card debt that is held by the nation's treasury, and by slightly more than 11% of the potential credit card money to be created by those treasury credit cards. Businesses can offer their own interest-free loans and interest-free lines of credit in this banking system. Financial markets that have been investing in interest-earning investments will have to change their investment practices in the new economy. To protect the people who are already vested in the present-day financial markets interest-earning investments, the Treasury will honor their existing contracts. For the different administrative divisions of government needing money, they can cause the National Treasury to create the money they need as checkbook money by requesting funds from the Treasury by proving to the Treasury Secretary that they do not have all or part of the money they need for whatever it is they need the money for over their annual operating costs, and that the thing that they need the money for is for something lawful. Thereafter, if what the requesting government is using the money for will facilitate a proportional increase in production and trade, or the economy is deflating, then the money being given to them will be the exact amount needed to pay for all or part of whatever it is that they need the money for, and the money will be granted and not lent, so will not have to be repaid since it will not cause inflation. But if they cannot prove that the funds being requested will facilitate a proportional increase in production and trade, and the economy is balanced or inflating, then the money being given cannot exceed 1/3 of that government's jurisdiction's gross domestic product, and that money would be lent and have to be returned interest-free to the national treasury in order to contract any inflation caused by that money in the payment schedule form proposed by the requesting government and accepted by the Treasury Secretary for the maximum amortization period of 10 years. If there's a verifiable emergency in a particular jurisdiction and the administrative division of government responsible for handling that emergency requires financial assistance, then emergency funds will be given to the administrative division of government in crisis. Emergency funds are requested funds that are granted to the requesting government if the emergency can be verified. If the emergency funds cause inflation or contribute to pre-existing inflation, then a temporary emergency funds tax will be added to sales taxes until the inflation caused by the granted funds is over. The other and final cause for adding a temporary sales tax to sales items in the perfect banking system is war. If there's a war, which all things being equal, according to Guddle, Snapper, Rothschild, there should be no more wars once the central bank controlled fractional reserve banking system is replaced, but just in case there isn't, then the money created to fund the war will be called war funds. War funds are given immediately upon the request of the Commander-in-Chief after the People's Congress declares war. If the war funds cause inflation or contribute to pre-existing inflation, then a war tax will be added to sales taxes until the inflation caused by the granted funds is over. And if both circumstances occur at the same time, that is to say, an emergency and a war that both cause inflation or contribute to pre-existing inflation, then both the emergency tax and the war tax are to be applied to sales prices simultaneously. The set-aside account component of this banking system exists to enable the governments to control inflation. The Treasury set-aside account is a deposit account in which the government's surplus is stored and not accounted for in the nation's money supply in order to prevent inflation. The set-aside money is considered set-aside and no longer part of the national money supply until the following year when the set-aside money is reinstated to pay the people's annual surplus dividend checks. Annual surplus dividend checks are discussed near the end of this video. All checkbook money deposited in the set-aside account that has not been used for 7 years must be destroyed, and when possible, the documents accounting for that checkbook money are to be shredded and recycled after 7 years also. Any local complementary currency circulating in the jurisdiction of a particular administrative division of government that can be exchanged for the national currency at a fixed exchange rate during regular business hours in a secure location shall be deemed acceptable for payment by the administrative division of government for the local taxes, fees, fines, registrations, licensing costs, etc. Anything the local government charges money for, the local government will accept the local complementary currency for payment so long as it meets the previously mentioned requirements. The local complementary currency accepted by the local government will be used to pay local government vendors and service providers that accept said currency. Whatever local currency the government cannot use will be gathered and returned to the local complementary currency providers in exchange for the national currency. The treasurers for the different administrative divisions of government of a nation that uses the perfect banking system are charged with the duty of publishing weekly reports in their local papers informing the people of the weekly, monthly, and annual income and expenditures of their jurisdiction's administrative governments. Starting with the administrative division of government they work for, on up to the next level of government, and up to the national government. Also in the perfect banking system, if deflation threatens, the Treasury will pay the people deflation dividends checks to balance the economy. The money to fund deflation dividends checks will be enough checkbook money to correct the deflation and balance the economy. And it will be distributed according to age and the number of people in the population. The older the person, the more they will receive. The number of people in the population will determine how many people the money will be divided amongst. In the perfect banking system, newborns are paid to come into the world, unlike the current banking system that they are born indebted. With all past fractional reserve loan debts repudiated and the end of interest charges, as well as having money granted and not lent when it will not cause inflation, plus the government's already existing revenue sources, plus the collateralized loans and insurance payments, plus the credit card debt and credit card deposits payments, it's easy to realize that a government that uses the perfect banking system would eventually produce a financial surplus. A financial surplus in this banking system is any amount of money in a government's bank accounts that is more than double their annual operating costs. When this happens, the government should stop charging the people all non-sales taxes, victimless crime charges, and end both licensing and registration mandates. And because the perfect banking system is a bottom-up form of government banking system, the surplus flows upwards. The lower level governments give their surplus to the higher level governments, up to the national governments, and the national government gives its surplus to the people of the nation through annual surplus dividends checks. The amount of money to fund the surplus dividend checks will be determined by the amount of money deposited in the set-aside account and a vote from the people of the nation letting the nation's Treasury secretaries know just how much inflation they are willing to put up with. The amount of inflation the people can choose from to be caused by the surplus dividend checks will be between 0 and 10%, depending upon how much money is in the set-aside account. The surplus dividends checks are to be distributed according to age and the number of people in the population. The older the person, the more they will receive. The number of people in the population will determine how many people the money will be divided amongst. And remember the children being paid instead of being indebted. If the economy is deflating, then the amount to fund the surplus dividends checks will be the amount needed to balance the economy plus the amount agreed upon by the people of the nation. The amount of surplus money left over after the people receive their surplus dividends checks will remain in the previously discussed set-aside account. Alright, so there we have it, the perfect banking system to save the world with. Let's make it happen. We can have heaven on earth if we replace the current banking system with the perfect banking system. Remember, banking systems make the world we have. We currently have a parasitic banking system, so we have a sick world. If we have a balanced economy banking system, we would have a healthy world. The perfect banking system would produce the perfect world. We just need to get our governments to do it. That's it. It's really that easy once you know what needs to be done. Now just do it. Tell everybody. Assemble the masses. We now have a better product that makes the existing product obsolete. A better banking system that makes the existing banking system obsolete. Do what needs to be done to get your government to switch to this perfect banking system. The future depends on it. Think of the children. Think of the innocent animals, plants, and planet. And don't think you're innocent for sitting idly by. Force your government to replace its current banking system with the perfect banking system. For goodness sakes. In America, it just so happens to be the law. In summary, whenever any form of government becomes destructive to the rights of the people, it is their duty to throw off such government and to provide new guards for their future security. The Honorable Declaration of Independence, the founding law of the United States of America. And don't be deceived, the corporate central bank is really your country's government. They have de facto control over your government, or what you think is your government, because they own the monopoly on creating the money that your government needs and uses.
What is the proper relationship, what should be the proper relationship between a chairman of the Fed and a president of the United States?
Well, first of all, the Federal Reserve is an independent agency, and that means basically that there is no other agency of government which can overrule actions that we take. So long as that is in place and there is no evidence that the administration or the Congress or anybody else is requesting that we do things other than what we think is the appropriate thing, then what the relationships are don't frankly matter.
And now what is happening under the guise of COVID-19 is the bankers have decided they no longer want to share power with the electorate or the people's representatives. The central banks have decided essentially to take over. And the ultimate sort of completion of this will be when they introduce digital currencies controlled and operated by the central bank. Why is that important? Because they won't be currencies, Del. They will be a financial control system. To implement that system, they need the vaccine passports. And the goal of the vaccine passports have nothing to do with health. They have to do with implementing a new digital financial transaction system, which is in essence complete control.
We need to look deeper at the agenda that elites are pushing. It goes well beyond just vaccinating people. So this is about so much more than anti-vax versus pro-vax or anti-mask versus pro-mask. That's just a juvenile, superficial way of looking at what's taking place. And the key entry point for the fourth industrial revolution and this system of permanent control, biometric control over the global population are these digital passports and digital IDs.